Look, over the many years I've been investing, the one big thing I've learned is you don't put all your eggs in the one basket. And there are so many different alternatives to diversify your investments for success. I'm having coffee with Russel Pillemer, Chief Executive and co-founder of ASX-listed investment firm Pengana Capital Group, the company behind Australia's latest term account product, TermPlus, to find out his approach. Russel, thanks for joining us. Tell us about diversification and how important that is and what you've learnt about it.
Yeah, so diversification is absolutely key, as everybody knows, to portfolios. But really, investors need to think about the details of diversification. All fund managers go through good and bad periods. And the only way to effectively protect yourself against this type of volatility is to have diversification.
So a lot of people diversify into shares and fall in love with that as an asset class and don't look outside. You've developed funds in private credit. First of all, what is private credit?
In general, the market refers to private credit as any lending that's done outside the banking sector. So when we talk about private credit in a global context, we're talking about lending to corporates. So if you think about it from a diversification perspective, if you have exposure to Australian private credit, you really have got an underlying exposure to property. Whereas in the offshore context, you'd exposed to a multitude of many different companies with different dynamics. So you get genuine diversification.
It is a great way to diversify because for a lot of income investors, there aren't too many options available, are there?
The crazy thing for investors today is that in order to make returns, you need to take on a fair amount of risk. So going into equities over the long term can be fantastic, but they're very, very volatile. And we've seen, example in recent markets. Bond portfolios are also very volatile. With changes of rates, etc.
And private credit gives you more stability.
Private credit doesn't have that correlation with listed equities like bonds do.
So how can everyday investors put money into private credit?
We have a product called TermPlus, which enables everyday investors to get invested in this great asset class in a highly diversified way. So investors are able to invest in a 1, 2 or 5 year account that generates really attractive returns. And these returns are variable rate returns in that they earn for investors a margin above the RBA cash rate. That margin is really attractive for investors. And also because this is such a highly diversified portfolio invested into essentially loans with billion-dollar type companies, there's a high degree of risk control or downside protection involved in this portfolio. So it's really this nice mix of, good high single-digit returns, some lower risk, and certainty that investors are invested for a period of time. So if investors are looking for a steady monthly income-generating product, TermPlus is a great alternative.
Just finally, you've worked overseas, you've worked at the big end of town, you're now running a really successful investment fund manager. What's the best bit of investment advice that you ever received?
The best bit of advice is probably a simple piece of advice, and that's invest with fund managers who've got skin in the game. So fund managers who are either investing alongside you or providing with some type of protection in your portfolios. So they'll win when you win and they'll lose when you lose. It's simple, but it's very, very effective.
Great advice. Russel, good to catch up.
Thanks for having me.